India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Mangalam. Guys, hi, good morning.
Hi.
And Mangalam, welcome back.
Well, it was a great break, and I think because it was a break, it's only wisdom which prevails, and I have to just keep quiet and listen to both of you guys talk during the show.
I'm sure that you were tracking markets that way every single day. From Georgia, I believe?
Yeah, from Georgia, but I was getting messages saying that, Indian markets are doing extremely well, and people in Georgia are well aware of the performance of the Indian markets and some of the Indian songs, etc. as well. A little more than I would have expected them to be.
And Mangalam is back right in the middle of a lot of festivities as well, right?
Yeah. Yes, that's the best time. September is a great month, the onset of festivities, and for FMCG as well, just post-monsoon and people talking about good demand, etc. Let's see how that pans out.
Unfortunately, September is not such a great month for global equity markets. It's seasonally been a very tough period.
Absolutely.
And the start has been weak.
Start has been weak as well. So, let's just begin by telling you what happened because, there was... it was not a decisive data point in terms of the jobs report, and markets were hoping that it would be, but it triggered a decisive move in markets. So the data itself not decisive, and that is the reason why, actually because of it, there was a bit of a decisive move in markets. So I'll start with the change on your screen. The S&P was down about 1.7, Nasdaq down about 2.5, the Russell 2000 was down about 1.96%. That's about 2% cut. So these are large changes down that we had. Now, what was the problem? The problem was that the market had hoped that this particular jobs data, which is the last big number before you get to the Fed meeting, will provide clarity on whether the Fed will start with a 25 basis point cut or a 50 basis point cut. And this first cut is important because, if the economy is much more weaker and they start with a 25 basis point cut, the risk rises that the Fed is falling behind the curve. At least the perception rises that they're falling behind the curve, and this needs to be addressed with a larger rate cut, larger quantum of rate cut. But the problem was that the data itself, on your screen, the number of job additions were weak at 142,000. The expected number was 160 plus. So it's not that big a miss. It's not like the last month when it, of course, was a disaster. But it was weak. It was weaker. The unemployment rate, though, fell. I mean, if the unemployment rate had risen and the job additions were weak, it's all going in the same direction. But here you have sort of data also going in two different directions. The point is, you did not have clarity enough to call either a 25 or a 50, clarity enough to say whether the economy actually is weakening much faster or actually it's okay and a little bit of sort of softening as expected is what is taking place. And that is the reason why markets actually got a little panicky, at least in the near term. Now, you also had comments from FOMC sort of members on the voting committee who decide on the Fed policy. So two gentlemen, they spoke and they also did not really provide clarity. And that did not help either. So the reaction from markets, as I said, equities sold off, S&P, Nasdaq, etc. Wix jumped about 12%. We are back at about 23.5. The CBOE Wix, the volatility index. And take a look at this. The market pricing of what the Fed will do in the month of September, it fell to 30 basis points as compared to 35 basis point pre, the speech from one of the members, Fed committee members. So that is interesting. Now, the 10-year absolutely unchanged, 3.72. By the way, it did fall in the 3.6 handle, but then recovered a little bit. Dollar index, it actually went up, but it's been weakening for the last 3 days prior. So there was a bit of a reaction on the higher side. Oil prices 1.6% down. We're at about 71.5 odd in terms of Brent oil prices. So that's essentially the indicators. This sort of week, that is tomorrow, U.S. time, you'll have the first presidential debate between Republican candidate Trump and, of course, the sort of not-so-new Democrat candidate Kamala Harris. And I think it'll bring into sharp focus the risks of what happens with the presidential elections as well. I mean, actually, if you just step back a little bit and take a look at what's happening in the U.S. holistically, both what the Fed will do and, what will happen out of the presidential elections, it just feels like a flip of a coin, right? It's very, very close. Both those things are very close. And markets, of course, at least in the near term, do not like uncertainty. Here in India, I mean, so let's just come back and look at what this will mean for the markets here. We may have kind of preempted some of the fall that we saw on Friday, right? We were all wondering on Friday because that 1% plus kind of a cut on the Nifty came out of nowhere. FPI and that regulation, some were blaming that, some were saying, well, seasonality and things like that. But I mean, you want to take a slightly higher level view. You may kind of try to say that some of the cuts that we saw in the US market, we paid for on Friday itself. We have a negative weekly close. So then you look at supports. On Friday morning as well, I just put supports, not targets, because it was looking like that kind of a market. Supports at 24,623. That's the nearest one, which is the 40-day exponential moving average. The next support below that, a break below that, comes in at 24,444, which is the 61.8% retracement of the rally. For the Nifty Bank, again, I'll just put out the supports here. So first one comes in at 49,838. It's a daily lower Bollinger Band. And then you get to 49,654. These are all very within 1.5 to 2.5% ranges on the downside. And on the way up, because the Nifty Bank has been the underperformer, it's sort of tried to outperform but has been smacked back down. It's the 40-day exponential moving average, which is 51,021. Again, very, very near-term kind of levels is what we're looking at. GIFT Nifty will come up on your screen. It'll give you an indication of how the start is. It's again down about 60-odd points. You may get attempts at a pullback, attempts at trying to buy the dip. But, I mean, I think I said it over the last 2 days as well. Better to get a little bit more clarity. Seasonally, it's very strong. Seasonality in presidential election years out of the US is very strong. September itself is a weaker month. So let markets and things settle down a little bit, and then maybe you take a call. Time-wise, I think the market needs to consolidate a little bit more than anything else. Rima.
Well, Asia this morning is sharply lower. So you've got a 1.5 to 2% cut going for the Nikkei, Hang Seng and the Taiwanese index, while the Chinese markets are down close to about 1%. But we've got our hands full, not just today, but for the entire week. So a quick run through of what are the big triggers, cues to watch. So first on the global front. So today is the flagship, much anticipated annual Apple event. And the tagline this time is glow time. So apart from awaiting, the Apple 16, newer AirPods, etc., the street is also going to be watching for Apple Intelligence, and all that AI is going to be incorporated in the, more expensive Apple phones, iPhones. On Tuesday, as Prashant said, is the presidential debate. Then you've got economic data points like US CPI inflation print and the PPI, that's the producer price inflation print, to watch from the US markets later as the course of the week plays out. And then you've got the University of Michigan preliminary consumer survey for the month of September. All this will help you gauge the health of the US economy as we get into the September Fed rate hike on the 18th. That's the following week. On the domestic front, today you've got the GST Council meet. We'll discuss that in greater detail. But keep your eye on the flows too, because last week, while on Friday, the FIs did sell in the cash market. For the week, it was a buy figure of 2,430 crore. And plus, domestic economic triggers like CPI and July IIP will be unveiled on the 12th of September. IPO market continues to remain hot. So today, 2 IPOs open for subscription. Bajaj Housing Finance, that's a large one, 6,560 crore in terms of a size, and a smaller tyre company called Tollins Tyre, which is looking to raise a little less than 250 crores. But through the course of the week, Cross and PN Guardgate Jewelers will also be opening up for subscription. Listing today will be Gala Precision Engineering. Again, a small company. They mobilized 168 crore, but saw a subscription of more than 200 times. And then later this week, you've got Sri Tirupati Balaji Agro too to watch. Hi.
Hi. So, you guys spoke about the setup today, etc. as well. And I saw the markets on Friday and they did look a little scary. The good part about distance is that it gives you perspective. So then I looked at where the Nifty was when I left and where the Nifty is when I came back. The Nifty when I left was 24,822. Today it's 24,852. So the Nifty is just marginally higher. No problem. So, if you look at it from that perspective, the Nifty Bank, yes, down, but not down by more than 0.75%. The mid-cap index absolutely flat as well. The small-cap index has actually increased. So if you just take a look at the way the market behaved in the last 2 weeks, the first week and the second week, it seems like, excesses were being taken out on both sides. Why do I say that? Because on Friday, if you look at it, the FI sold about 3,100 crores in index futures. They unwound around 37,000 long contracts and added 10,000 short contracts. You would say, oh, that was a big amount of selling. But you know what? Before that, in the week prior to that, they were 72% long on index futures as well. So let's look at it from 3, data points or 3 dates. August 23, the FI net contracts on the long side were 25,000, 52% itself at the lower level. And then the market started moving higher. They built it all the way up to 2.4 lakh contracts, going all the way up to 72%. So because it was an extreme on the upside, then they had to unwind those positions. And now as we speak, it's at 1.6 lakh contracts and 65% long. Who bought the FII selling and who sold the FII buying? It was the HNIs and the clients. So if you look at it from the same data point, on August 23, the client net contracts were 52%, not very different from the FIIs. But in the week from August 23 to August 30th, when the FIIs were buying, the HNIs were selling. So they reduced their positioning from 52% to 40%. And in the previous week, when the FIIs were selling, they reduced their longs from 72% to 65%. The clients actually increased their longs from 40% to 49%. So if the near term is to be believed, maybe we could see some support at current levels itself. Why do I say that? Well, because one, we have the 20-day moving average on the Nifty, which is pretty close to where we are right now. Below that, we have the 50-day moving average, close to around 24,600 as well. And if you look at the put writing at 24,850 for a premium of almost 150 rupees, telling you that, close to around 24,700 would be an important support as well. So where do we have supports? 24,600, 24,700 and 24,820 as well. On the way up though, there would be some resistance around that 25,000 mark. For the Nifty Bank, we'll watch out for any level of support coming in at the 100-day moving average, a level that the Nifty Bank hasn't broken, with a lot of conviction in a very long time. And on the way up, it'll be the 20-day moving average, which will be a bit of resistance. The one stock that I'm watching out for today will be Marico. All of last week, the FMCG stocks did well, but in the FMCG rally, Marico missed out largely because of Bangladesh-related issues. Now that we're behind with the Bangladesh issues for current, period, maybe the street is betting on Marico once again. We saw some stock price movement along with fresh long positions being added on that stock too.
Interesting. Thank you very much for that. Let's get to the equity calls then for the day. Mahesh Nandurkar of Jefferies says the Indian equity markets continue to stand out as the consistent strong performer over the short and long term. He says they remain bullish from a long-term perspective as investments-driven GDP growth drives corporate earnings. He says domestic flows could trend down to a more sustainable level in the near term, but potential improvement in foreign flows would act as a cushion. He says they're overweight telecom, banks, staples, two-wheelers and power from a long-term perspective. They also like industrials and real estate.
Let's get you some equity calls then. Alexander Redman of CLSA says, for global equity allocators, the first emerging market decision point is to determine exposure. He finds that superior emerging market GDP and EPS growth differentiates a steepening of the G7 yield curve, strong EM new orders to inventories, positive earnings revisions, and a monetary policy easing bias are not yet discounted by asset pricing. He says India still remains primed for regional outperformance and a strengthening external position, robust earnings growth, sustained domestic retail equity investor appetite, and manageable energy prices continue to power the market.
Well, that's some interesting opinion coming through. So one local from one global as well.